It's your boy Jobs back again for another Sunday Saturday. Today we'll be talking about the pair NASDAQ. It's going to be a really quick one. This is actually the same key levels I marked up in my video on the 5th of February. So be sure to check that video out. Perhaps check the one out first before you continue watching this one, as it will elaborate exactly why these yellow lines dashed and solid are on the screen. So as some of you may know, I'm a big fan of support and resistance levels. This is what you're seeing on the screen. I failed to miss a trade on the 24th of Feb due to observing too many pairs. If you watch my other video about trading tips or the 10 best trading rules for new traders, you don't want to have multiple pairs that you're watching, because you will easily forget a trade that you actually marked up, and familiarize yourself with how the chart moves, the times the market opens, the times the market closes. Each pair behaves a different way to the other. That's why you have your main pairs, you have exotics, you have futures, you have indices. So anyways, coming back to the trade, as I mentioned, so this was one trade we see was rejected off this sub key level, which is 13,000, and bounced exactly to the next key level, which is 13,750. Similarly to what happened this week, we see the 15th of March, we waited for the market to bounce to this area, bounce up, and the reason for only entering at this level is just to be safe. As soon as it broke above 13,150, the market moved all the way. My first TP was actually 13,750. Due to work, I also took profits earlier, which is very sad. If you're a trader, or if you want to get into trading, just please be accustomed to FOMO. The fear of missing out is real in trading, because you will always be missing a trade somewhere at some time, right? As I say in my 10 tips video, just be sure you stick in your own lane. Obviously, we have a nice clean move, and obviously your stop loss would be lower than the previous low, right? So it would be 12,900. Take profit about 13,750, and we see we have almost a 1-to-3 risk to reward ratio. For those who might not know what risk to reward ratio means, it's basically just the ratio at which how much you're willing to risk and how much you're willing to gain. The higher the risk to reward ratio, the better your chances are in terms of making bigger turnarounds, right? So you take 10 trades, if all of them are on a 1-to-3 ratio, even if you have 6 losses, technically if you stick strictly to your ratios, you will still have more profit at the end of the day with just 4 wins because of the ratio, right? It's times 3. One of the other biggest things in trading is learning to hold out until it reaches your prediction or your markups. Here we have signs of a reversal potentially, and this is where most people probably would have taken profit, but I knew the market was going to move to 750 due to the weekly key level. This level was rejected and respected throughout this year. So we know it's going to move to that position once again. It's just a matter of being disciplined to be able to stick through that trade, as this trade obviously went over a couple of days. And if we didn't actually have a TP there, we're just watching the market, you can kind of see it's even reaching to this further key level.